Why Bitcoin, after 14 years, going on 15 now, of existence, is just now becoming a real macro asset. My name is Chris Dover. I am head of systematic trading here at MacroOps and crypto trading. If you're interested in macro research and this type of content, first of all, like and subscribe to the video. And you should go to macro-ops.com and sign up for our newsletter. We put out a couple of reports, macro-based reports every week. We also cover crypto, value investors. There's a whole world of things that we cover. Sign up for that. It's completely free. And like I said, like and subscribe to the video, and let's get right into it. So for the past 14 plus years, coming up on 15 years, Bitcoin has been in existence. And it wasn't a true macro asset, despite every crypto bro telling you that you're not going to make it, that if you don't own Bitcoin, then you're just throwing away your money, all that stuff. It wasn't until this year that it became an actual real macro asset that has real value in the world. In this video, I'm going to talk about how that happened, where we're at with Bitcoin itself. I'm not going to talk about like crypto and meme coins and AI and all the other things in the space. I'm just going to focus on Bitcoin as the asset itself, okay, and why it's a legit macro asset. And also, I'm going to go to the charts and kind of break down what I'm expecting to see from it, because we're looking at Bitcoin right now at $100,000 at the beginning of 2026, right? Like at the beginning of last year, it was, I don't know, what, 20, 30? No, it launched ETF. It was at about 65,000 and dropped down to 38,000. So it's a volatile asset. It's hard to just kind of jump right in. And so after we talk a little bit about Bitcoin, why it's a legit macro asset, I'm going to go in and I'm going to get tactical, like where I'm looking to put in some orders. If something happens, this is where I want to be buying. This is, if this continues to happen, this is what I expect, some of that sort of stuff. I'm not going to throw out these price targets, because that's not really my game. There's plenty of people on the internet doing that. So the other thing I won't be doing is trying to call you an idiot for not being in crypto, or red pilling, trying to orange pill. That's the term, orange pill, because Bitcoin's orange. So let's start out of why. Well, first of all, I started trading like in 1999. So I've been a macro investor, trader, systematic algorithmic trader for like over 25 years. So I'm not just some crypto lunatic. I've been doing this for a long time. I got into crypto trading maybe around 2013, but it wasn't until late 2016 and into 2017 that I got really serious about trading crypto. I started my own hedge fund in 2017, a crypto hedge fund. And it was just becoming, crypto itself, the asset class, was just becoming available to retail investors. So places like Coinbase and Kraken and Gemini and Polonia, like there was a bunch of exchanges that existed then that a retail investor could sign up, put some money in, and then go buy crypto. And that was like the big onboarding of the early investors, right? It wasn't easy for traditional Wall Street or traditional finance to do that. Like there was no regulation on the asset class. There were no products that were really safe and understandable in places. There was, in 2017, they did get the futures products on the CME, but even then it wasn't really that big of a thing. So that was largely like a retail onboard into the crypto space. And that's why, even though it was, something that everybody was talking about in 2017, it wasn't really in the traditional finance. Now, I'm raising money for my hedge fund in 2017. So I know it wasn't, because I would talk to investors and they would ask, what sort of regulation, what sort of law, what are the protections? How is this stored? All the things that they should be asking. And these were all reasons that they could not invest. There was no safe way to invest for them. They had to take a shot on me. So what ended up happening was these fund of funds, these people from more traditional Wall Street backgrounds, allocators, raise some funds and they would allocate to multiple different funds. That's how I got some funding. Okay. That's mostly what it was. But it was either high net worth individual, fellow crypto folks, or like the fund of fund type people, occasional family office. That was it. There was no institutional money coming in. There was, anybody who was like forward looking, they were able to do it, but it was like they had to take the big bet. And of course, Bitcoin goes from something like 500 or 1,000 at the beginning of 2017 to 20,000 and then crashes back down to 3,000. The next few years were pretty tough. So really hard to convince people that Bitcoin was a legitimate macro asset. It's this hard asset that you can't just magically go and print, make more of. There's a limited number of 21 million out there. Okay. So when you juxtapose that on what happened in 2008 during the global financial crisis, where the central bank, the Federal Reserve, comes in and just magically prints nearly $1 trillion, that was unprecedented. But in modern times, that was the first time that the world had actually seen that much. And from then, March 2009, the market just pretty much went straight up from there. There were some hiccups, and they spent the next 10 years or so, the next decade, paying it off and paying it down and all that sort of stuff until about 2020, when the world got, completely shut down. And now they magically print an unprecedented amount of money. Now, the thing that makes that interesting is because there's nothing backing that. And then this is just, they learned it. The central banks learned that if there's a problem, we're not going to get a recession because we're just going to print money through it and people will accept it. As long as, we work our way through it in the future, we start paying it down. We're responsible. Silicon Valley Bank went in and saved there. So they created all these tools that they can use to keep the financial markets and keep the economy going. The thing about it is that debases the currency at about 8% per year since about the 2020 period. So the value of your dollar loses about 8% every year. And then you add in inflation, which generously will say 3% to 5%. So you're losing anywhere from like 11 to 13% of your purchasing power every year if you are not in assets that are increasing in value. And if they are not increasing in value or higher percent, then all you're doing is basically just breaking even. So even though you're in the risk of owning, let's say, the S&P 500, which itself returns about 11% annually, it also had a 34, I believe, percent drawdown in 2022. So you're keeping that 11%, but you're having these huge drawdowns. So it's not like you're actually leaving the volatility by being invested. It's just that you're maintaining the purchasing power over time. With something like the S&P, you have 7 names that really generate the 11%, and then about 500, 400, whatever names that are kind of polling against it. So you get the risk of it not working with a little bit of the upside. So you need, in order to outpace that and to continue to make money, you need to go further out, more concentrated on the risk. Right, investing in technology, and that's like the Nasdaq, the Magnificent Seven, or Bitcoin, like we're talking about here. So some of the issues of Bitcoin that I always hear, and all of the downsides, all of the bad things that's happened about Bitcoin are the good things that's happened about Bitcoin. It was drug dealers, dark web, and all these bad things. So, the government kind of came in, and you would have thought that if it was actually that sort of thing, they would have been able to shut down the Bitcoin. They couldn't do it. China bans it. China bans mining. These other countries ban mining and ownership and all these other things. Doesn't stop it. In 2017, there was 2 contentious groups. One said, we'll stick with the original Bitcoin block size, blah, blah, blah. Another one was like, no, it needs to be big. Okay. So you had a split. And this is the question of like, well, what happens if somebody just magically comes in and says, you know what? I don't like Bitcoin how it is. There's only 21 million Bitcoin. That's stupid. We need to have 100 billion Bitcoin. We're going to print magic internet money out of Bitcoin and, it's going to be great. Well, so they tried this with this thing called Bitcoin Cash. They came out and they proposed the new, and everybody had the right, the miners, the validators would update their code to this code or that code, the Bitcoin code or the new code with the new idea. Well, everybody went with the old one. The new code, they gave everybody, they airdropped everybody this Bitcoin Cash. So if you owned $10,000 worth of Bitcoin, you got $10,000 worth of Bitcoin Cash. It was just magic internet money. Guess where that money went? Back to Bitcoin. Everybody just kind of like sold their Bitcoin Cash, put it in Bitcoin. Bitcoin now is trading at $100,000 per Bitcoin. I believe Bitcoin Cash is guessing probably, in the hundreds, maybe, I don't know. It's not 100,000. It could be like 1,500, but it's definitely not taken off. It's not a $2 trillion asset. So, it has been tested. People realized why they wanted to have this block size. In 2020, when the magic money was given to everybody, Bitcoin crashed when everything else crashed. So the store of value argument that everybody's like, look, there's no store of value here. If the value of it, declined from whatever, like 5, 8, 10,000 down to maybe higher, down to 3,000, it crashed just like everything else. The reality is the value, the purchasing power, the price of the Bitcoin did, but everything did. And that's what happens during these panics, right? These crashes. Everything gets sold. You have to sell everything to pay your margin calls, to like stay afloat, to, if you just lost all your money, well, at least you had Bitcoin, so you sell it and pay your mortgage or whatever it is, right? That everything went down except maybe like the dollar, because everybody had to move into the dollar to pay off their obligations here. But it comes back, and one thing that didn't happen was you didn't lose the number of Bitcoin that you had. You still had, if you had 10 Bitcoin, you had 10 Bitcoin. It was only able to purchase, let's say, $30,000 of US dollar goods, but that changed. It came back and, ended up higher. So there's no debasement of the currency. And then that just makes it more resilient, because coming back from 3,000, it closed the year up 30,000 in 2020. Whereas, your purchasing power of the dollar went down substantially in 2020. Sorry. Orange pill you into why Bitcoin, you need to own Bitcoin, all these other things. And then not your keys, not your coin. None of that. That's not what makes it, your Bitcoin in cold storage on a piece of paper in your safe, that, all that. Great. If that's how you want to do it, that's fine. But that's not what makes it an actual macro asset. In fact, that probably keeps it from being a macro asset. What makes it a macro asset is that it is traded and it is used. And it wasn't until 2024 where the ETF was launched. So the issues that we had of people wanting to invest in crypto, but couldn't because there was no like legal stuff around it to protect the investors, they wouldn't do it. But now the largest asset manager in the world, BlackRock, came out and created an ETF, Fidelity ETF. Like, there's all these ETFs by the biggest institutions on Wall Street. And it was the most successful ETF launch in history. We had multiple billion-dollar inflow days, hundreds of millions of dollars every day. And it just keep coming and coming and coming all year long. And now we're into 2026 and it continues to show up. So that sort of thing makes it a legitimate asset, a macro asset. But that's just the equities. Then we got options. Okay, they opened up options trading on some of these ETFs. They created an options market. So now you have the ability to hedge. You have the ability to protect yourself. You have the ability to, buy it by, selling deep in the money puts, or, like doing multiple strategies by going from just futures and spot to the actual ETF. That opens, each one of those opens up a new potential allocator who can come into the space in big numbers. And then you add options. Now you have volatility strategies. Now you have different methods to protect volatility, to earn by selling products and hedging, short the futures, buy the equities, then do calls. Like there's so many ways you can do it there. So that opens it up quite a bit. And then we bring in another asset class, the corporate bond market, with the MicroStrategy selling these convertible bonds that now, how would you have gotten as a convert trader or fund or something like that? How could you have gotten exposure to crypto or these high fees or anything like that before? You couldn't do it. By doing that, you now include an entirely other asset class that can now allocate to Bitcoin. So you've got your traditional spot, like the people who are just going to, mine the Bitcoin and then own the Bitcoin, or they're going to go convert their current currency into Bitcoin. You have the traders who are trading in all these other things, and their denomination is cryptocurrency. That's like the solid base that the last 14 years of crypto has been built on. This year, if we kind of like we're at that pace to do it, and that had us at a price of Bitcoin of about $1 trillion in market cap at its best. By adding equities with all these firms and adding options and adding the bond market, it doubled. It's now a $2 trillion asset class. And I want to say, the last thing that we haven't really touched here is that there's legitimate publicly traded companies whose treasury is invested in Bitcoin. Now, for the last since 2017, when I started the fund, I've talked to endowments, I've talked to NGOs, I've talked to nonprofits, I've talked to non-public companies who wanted to invest in their company's profits, their assets, their cash into Bitcoin. And, I've done what I could to help them, do it. Some of them just, take the Michael Saylor approach and just, talk to their board about these sort of things. Some of them actually are like, look, I want a trading strategy that I can trade crypto on the assets in here so that we can grow. Like the trading operations, we could grow our asset value because we're in the right asset. We're not getting into assets that blow up and go to zero. We're getting into assets that are working. And so, spot, ETFs, options, converts, and then corporate treasury. Now, I know companies that bought Bitcoin years ago when they shouldn't have, and they still have it, so they've done that. So this is everywhere. It's becoming a real global macro asset. Russia, I believe, is using it quite heavily due to the sanctions. I'm sure that they're not the only ones due to sanctions who have been using that, which means that it's super important around the world. It's very important with countries that are you think of Argentina, Brazil, Venezuela, Turkey, where inflation had really ran wild. For the average citizen, for them to earn or for them to convert into whatever currency they're getting paid into Bitcoin has been huge. So many of my friends that are in Argentina and Venezuela have saved themselves because of that. But let's talk about tactically, because it's sitting here, and I'm going to share my screen. It's sitting here at $100,000. It's at $98,607 right now per Bitcoin. And let me show you, this chart is the Bitcoin. It's a conglomerate of the Coinbase, spot Bitcoin, the Binance perpetual futures, the Bybit futures, and the CME futures. Okay. So it is a conglomerate price of all four of those. The CME futures stop trading when the CME stops. And then they take the weekend off, just like every other futures product on the CME. But the rest of them still trade. And the reason I decided to include that one is because I'm focused on this volume profile chart over on the side. Okay. So this is Bitcoin from 2020, the beginning of 2024 to the beginning of 2025. And so there was the launch here of the ETF. You can see the first week, each bar is 3 days, by the way. So this was the launch of the ETF. So it launched here at 47,000. It rallies up to 50,000, sells off down to 30 or so thousand. And then that was the bottom in January, and it goes straight up to 75,000. Okay. So 100% gain, give or take, in about 2 months. And then it just goes sideways. And what you can see is that creates this volume profile, this huge volume node where this dotted line here is the point of control. That's where the most amount of Bitcoin was traded. The largest amount of Bitcoin on those four markets was traded in 2025. And that was about $67,000, $68,000. 71,000 or so is about the level that it peaked in 2021. So it comes up and it hits that same area, puts in a new high, and just kind of bangs around and makes everybody think that that's it, that it's over, despite billions and billions of dollars coming into the ETFs every day. Then we get the yen carry trade unwind spook this summer where everything crashed. And you see where does the price go down to and where does it reverse from? You see these low volume nodes. So if I was to take this out, then you could see like a gap in price where there was no orders traded right there because price up until that time jumped. This whole area just jumped. Like all this stuff was just price gap where somebody who wanted to buy it didn't get it. And so we put our orders in down here when the yen unwind happened. We put in our orders because that's when it starts dropping into there, and we want to own it. We know, like I was bullish. I knew I still had the same. My bull market signal started in October of 2023. It's still on. It has not ended. It still has another 200-300 days, assume, before it starts to show weakness. So I put a bunch of orders in here. I buy it up, and then as we start coming into the election, it's already rallying into the election. So I'm in at 50, 53,000. It's at 75. It's a 50% winner, and we're heading into the election. And then it doubles, not doubles, but another 50% higher up there, up to 100,000+. So same thing happened over here, though. That same gap area that we have down here at 50,000, we have in here. So we have price levels, 83 to 85,000 is the lowest volume that was traded during this post-election rally. And so I got some orders in here. I went in and I just kind of put in some limit orders here and here and here. I'm trying to make this a little more level. All these levels here, all the way down. And then, of course, because it's crypto, 69,000. Actually, I got it at the point of control here because that's the most amount of volume. So that's the most amount of support. So I've got limit orders, like 6 or 7 of them, all the way down. I put an article out at midweek saying, hey, end of year, this thing's rallied from 44,000 to 100-something thousand. If you bought the ETF, you're up at least 100%. If you sell the first week of the year, you get to defer your taxes into 2026. So I thought that there might be some weakness from that event. It didn't happen. I mean, we did get a drop there, but it didn't come down into here. So far, it's been strong after a little bit of weakness in the market. On the first day of January, second day of January, was super strong in the market, up 5% on Bitcoin. I don't see, you know, there's no, it's not saying it's going to drop. Nothing tells me that. I just know that there is a possibility that could happen. And so while I do own Bit, my buy signal happened back here in October at about 28,000, 30,000. So I bought some there. I bought some at 38, 39,000. And then I bought some more at about 50 to 53,000. So I own Bitcoin myself from those levels so far in this bull market. So if we don't get filled down in here, I'm fine. I'm great. Now, if that happens, I will gladly add to my Bitcoin all the way through here. And unless I get my sell signal, which should not happen for at least another, more than 6 months now, probably into the fall, Q3, Q4 of 2025 is where I would be expecting to see some weakness in start to come in or toppiness happen in Bitcoin, but it may not happen. Who knows? And it may happen sooner too. So I protect it. But if I did not own Bitcoin and it's currently at 98,000, whatever, right? 100,000, give or take. Well, I would, put a little bit on right here, because the thing about Bitcoin is, and this is, look, I'm a systematic quant trader, so I would use a strategy to get me in. But if I don't have a strategy to do it to get me in, I would say, okay, well, let's say I'm going to buy X% of my portfolio. I'm going to go put a percent of that percent on right now at the market. Let's just do it this way, BTC USD. And let's go back to Bitstamp, because this is the longest data set we have. I've been trading this since, way back over here where it was 2014, 2013, a couple $100 each per Bitcoin. It's at 100,000 right now. So, I've seen it go from where I thought, oh, I'm going to be cute. I'm going to put a buy a bid, a limit order in at 500. It's currently at 650. That way, when it drops, I'll just have some, and it drops down to like 505 and then sends it. And then I watch it run to like 1,500 or 2,000 or 3,000. And I'm like, what? Okay, awesome. I just missed my opportunity. So that's why I say, I like to buy Bitcoin at a place. If I'm going to buy, I'm going to put a little bit in right now, because you never know. A market that trades 24/7, 365, and is now, because it's a 2 trillion plus BTC. Where's the market cap? There it is. It's a $2 trillion market cap. This is why I say that it is a real macro product, because as we bring it to the end here, you could not put money to work when it was a $500 billion product back here at, 25, when Bitcoin was at 25,000 and it was like a $400 or $500 billion market cap product. It's really hard for a big company, a big, asset manager, big pool of capital to come in and not affect the market. When it's a $2 trillion asset class, it unlocks the ability for big money to come in. It can do it through ETFs. It can do it through spot. It can do it through options. It can do it through futures. It can do it through convertible bonds. It can do it through private placement in companies that can then go and buy it on their treasury. There's a number of ways that you can now put capital to work in Bitcoin from its $2 trillion. If it does by chance go to what gold, let's just do gold. I think gold is something like 8. Oh, okay, 17 trillion. So it is 1/8 the size of gold, right? And so there is central banks buy gold, right? So there is now that legitimate opportunity. Gold is harder. You need to store it. You need to transport it. You need to pay to manage it. All these other things, right? That's what makes gold such a hard thing to invest in. That's why the ETFs are so nice. But Bitcoin, hard, right? It was hard to invest in because you had to own the Bitcoins to do it. Now you don't have that problem anymore. So I think that argument, feel free in the comments, let me know what you think about that. sign up for the email, and you see one of the emails you don't like, reply to it and be like, you're an idiot or whatever. But I want to hear your thoughts on why or why not you think Bitcoin is a legitimate macro asset. And the next time something earth shattering news, exogenous event hits the market on a Saturday night or on a holiday when trading's completely closed, what asset are you going to go look at? What are you going to go do to see what the global market's reactions are? It's going to be Bitcoin. It's the only thing that's trading because it trades 24/7, 365. That's all I got on this one. Have a wonderful 2025, everybody. Again, let me know your thoughts. Love you.